Hi guys, thank you for having me. This is an amazing event and an absolute pleasure and an honor to be involved. So I'm going to be here today discussing the future of financial media and then current retail investor trends we're seeing in the market. So right now, I'm here as part of Stocktwits, which is actually the world's largest social network of active retail investors and traders. It was founded in 2008, but then as a part of Twitter. And so we invented the hashtag back in 2008. And so that was our first founding and our first step towards overall growth and awareness and kind of brand building. So right now we touch over 20 million active investors every day. We have users in 200 countries and 10 million overall users on the core platform. We also have a massive social media base in India, globally, and the like. And so we have a pretty clear touch and a clear vantage point on overall retail investing trends as well. So it's founded by a guy who's my mentor. His name is Howard Lindzen. He's the first investor in Robinhood, first investor in eToro and Alpaca, who's also speaking here today. And he's famous for kind of he was the first one to kind of discuss the overall democratization of investing trend. And so I run the business day to day. I'm the president and COO. But prior to Stocktwits, I was an investor in both public and private markets for many years in the US. But before getting into India, it's best to start off with the US to understand what's happening in the US market and then understand how you can compare that, but compare and contrast that with what's happening in India. So first in the US, you've seen this extremely long, sustained bull market, and it's been the names we all talk about. It's all the large tech stocks, right? And so these stocks have been up 600%, 700%. They're names like NVIDIA, Tesla, a Spotify, a Netflix, Facebook, for example, right? And it's been fun. And so it's been a good ride for many people. And as part of all of this, Robinhood is the kind of most popular brokerage firm in the US who's now democratize access to equities and stocks and options and trading, right? And their kind of point has been to make investing fun. And that's a dangerous yet very interesting point, because now you've onboarded millions of investors who think investing is fun. And so that's the situation and the backdrop we're in a bull market. And so this is not a joke, by the way. This is so what's happening is that there's a new form of media that's emerged from this trend. And so this man here is a guy on the internet named as his name is Roaring Kitties on the internet. And he's the one who pioneered, but then he's the one who cultivated the huge movement in GameStop, which is a huge phenomenon in 2020 and 2021. And so now, because of all this, you see a man like him drinking beer and trading GameStop at the same time. And this is what's popular online, right? And so, but this is where we're going. And so as part of this trend as well, you're seeing retail investors who now consume media and consume stock market news on platforms like Instagram, TikTok, where it's not banned, but then YouTube as well, right? Let's go back. And so, but then as part of the same trend, you're seeing crypto come in as well. And crypto is now here to stay. It's more popular than even equities for Gen Zs in America and then globally and in some parts of the world. And you're seeing folks who just kind of relate to it better than stocks because it's easier to understand in some ways. It's actually not, but in some ways it's easier to relate to. It's easier to access in some regard, and it's kind of more fun because you can make more money and then lose more money at the same time. So it's only getting started from here. So Trump announced the day before his inauguration, but that he was going to launch a meme coin, and that meme coin hit $10 billion in market cap. $10 billion. But it's dropped since then, but 10 billion is a massive market cap, for a coin that really has no fundamental value. On top of that, you're seeing meme coins explode. So for example, if you see over here, this is the actual YouTube video cover where an influencer is talking about the next Pepe coin. And so Pepe coin was a very popular meme coin, and he's saying the coin that he found can go up 22,000 or 22 million%, which is insanity, right? And then it's not just crypto, by the way. It's also sports betting. So sports betting in the U.S. is now becoming very popular. Robinhood, who's the same equity and crypto broker I discussed in the previous slide, is now getting into sports betting also. And now the U.S. is legalizing sports betting, but state by state. And so about half of the U.S. now has sports betting allowed. So this trend of kind of, very aggressive investing, you could say, is only getting started. Now, if you go to India, you're seeing a kind of similar backdrop, right? So, but the same way the NASDAQ and S&P has done quite well, but the Indian markets have also done quite well. And so it's not just the indices, it's the blue chip names that we all know, but I'm sure you guys own many of these names as well in your portfolios. So Airtel, L&T, ICICI, Infosys, TCS have all done very well over the last 5 years. And it's not just the big names, it's also the new age tech stocks who are now also playing catch up because they all went public back in the VC kind of boom a few years ago where the valuations were stretched, they were hyped by media, and now what's happened is that because their valuations are now come down a bit, they're now focused on profitability, their competition is now dying because there's less VC funding available, but they're all now doing very well in the stock market. And so if you see the returns over the past year, they've all outperformed the Nifty, pretty materially, in fact. And so the obvious next step is that young, aspirational retail investors, but who want to ride the wave. It's a very natural phenomenon. It's happened in the US, it's going to happen forever. It's going to happen in every market, right? And the difference here is that India has gone from almost 2% retail adoption in about 2012 to 11% last year. And that's a completely massive shift. We all understand it's an early number. We're very early in the cycle. And I think it's good for India. I think it's good for society. And we all want it to happen. The issue is that the demographic of this audience is very young. And these folks, frankly, do not have knowledge of investing education at scale. It's a massive problem. And so, how you're seeing that manifest is the overall behavior from retail in India. So for example, here, you see the number of F&O investors in India has gone from effectively 0 in 2014 to almost 11 million in 2024. And so that means people basically who are buying speculative options, which may go to 0. And of this, 91% of option traders in India who are retail investors face losses. And this is a report that was done by the SEBI in 2023. So this is a very powerful trend. We have to be aware of it. And it's gotten so bad that frankly, at the peak, India accounted for 78% of global option volume. So, that goes to show you the trend and the power of our community, but the power of retail investors and the power of large numbers. And the good news is that SEBI has done a phenomenal job here, an extremely good job, frankly, of curbing this trend, of staying on top of it. And just recently, a few months ago, they announced they launched new rules, which has decreased monthly option trading volume in India by 70% from the peak in only a few months. That's phenomenal. This is a phenomenal way to step in and to be decisive and to do the right thing. And so I was very happy to see that personally when it happened. Now, in this period of time, from roughly 2020 during COVID and the bull market period until about a year ago, you've seen the rise of finfluencers. And finfluencers are folks who are not professional investors in most cases, who are entertainers, who have moved to the finance market to cover finance topics to help fill the gap in investing education. And this is dangerous, right? Because these folks are not professional investors, they're not regulated, they may own these stocks they're pushing, and they're not qualified to actually teach young people how to invest. And so, again, SEBI stepped in a few months ago, but then for the second time, and they've cracked down significantly on influencers, and they've effectively killed this industry. So this was mainstream media. This was discussed everywhere you would go about 1 year ago, and now it's almost dead overnight, right? And so now what's happening is that if you're a finfluencer, you can no longer act in the name of investing education, and you cannot sell your stock tips for money to retail investors. That's a huge thing. And so while SEBI has done a fantastic job, and I genuinely applaud them heavily, there are some learnings we can learn from influencers who've done a very good job. End of the day, they were getting millions of views on a daily basis. They were more popular than even CNBC and Z Business and the popular TV channels, right? And so there's a few learnings we should learn from how we can take the information from that cycle and apply that to future cycles. And the first step to learn is that this bad behavior happens in every country, it happens in every market, and it remanifests itself in every bull market cycle. This is how the stock market has worked for years. Second, in India, this is a very dangerous trend given the lack of investing education. Third is that the way we teach investing education has to materially evolve. So it has to be in the form of more engaging content. It has to be more relatable to Gen Z. We cannot go and tell Gen Z how they want to learn investing, right? And fourth, investing is best learned by the apprenticeship model, right? And so what that means is that it's easy to go learn and go study why you should buy a blue chip stock or why NVIDIA, Paytm, Zomato is a buy or whatever it is. But if it's down 20%, you have to learn from market veterans of what to do and how to act. It's not just all analysis. There's a market element to it. There's a FOMO element to it. There's a psychology element to it. But then even the best investors are always learning. But if you go speak to an investor who's in his 60s and this is his career, he will tell you along the way he's evolved his craft each year he's been an investor. And so, but then to introduce Stocktwits India, I'm going to share now how we kind of evolved and how we built this business to then address the challenges we have today in India. So first off, my first step when I launched the India business was to build India's largest media brand who's only focused on targeting the next generation of retail investors. So we have millions of followers today, in our community across Instagram, Stocktwits even, Twitter, our newsletter business, and things like that. And the key is to create content in a way that's simple, easy to understand, snackable, fun, engaging, but done in a professional manner. And so, but the next step to our process has been to go and onboard as many SEBI-registered investors as possible. And so the challenge with this is that if you're a SEBI-registered investor and you want to kind of grow your audience to build your business, you're probably not good at going viral on social media. It's a vastly different skill set than it is to run an investing business and to be a professional investor. So we help them do that. So we help them go, but then we leverage our overall reach and our distribution and our overall brand that we have to help raise their awareness and help them scale their businesses. In the meantime, what happens is that we help retail investors learn but the market's at scale, right? And the way this works is that if you're a SEBI-registered investment advisor or an analyst, you have to share your reports, you have to share your social media posts, all with the SEBI every month. And my team tracks this. They make sure that it's been done correctly, but they make sure that each SEBI RA is actually verified and his account is in good standing with the SEBI every month. And so as a part of this, we also have a pretty significant partnership with CNBC TV 18, where our content from the SEBI RA, but our content from SEBI RAs on Stocktwits, but then shows up on CNBC itself every day on 2 of their websites. And so we have case studies also of how we work with, but then with tier 1 asset managers and AMCs who are very curious and trying new content formats who want to target retail investors. One more trend we're going to see in India very soon that we do not see today is happening in the US right now, but still in early stages, is that public companies who can, but the public companies who cannot oftentimes show up on CNBC and Z Business because they're too small, maybe they're mid-caps, maybe their story is not as well told, will start using social media more to amplify their own stories, their own corporate strategy, their results, and things like that. This would be a very powerful trend for India when it happens. And then closing thoughts, where do we go from here? I'll keep it very short and brief. Basically, access to the stock market is now commoditized. Anyone in India, anywhere in the world can go buy a stock or an option anytime they want for free on an app. Second is that retail investors are certainly using social media more and more every day for financial news, and that trend is not going to stop. Third is that most retail investors who've entered the market in the last 5+ years or so have only seen a bull market. And this is a very precarious place to be in because in bull markets, everyone knows to buy the dip. At some point, you'll see very nasty corrections and kind of, but you see periods of time where the stock market is not as good as it is right now. And so this is very dangerous for new investors who are trained to only buy dips. Fourth is that investing education has to change. I mentioned it before, I'll say it again. This is the need of the hour in India, right? And we have to create content and teach, but we have to teach young people the concept of investing earlier on in a way they're going to remember and actually care. And then lastly, I think this is probably the most important thing. We are very fortunate to have a SEBI who's been very active, very decisive, and super quick to react. In fact, the U.S. should learn from it as well, to be honest. And so I think that's only going to even get better as we see market cycles. I think SEBI will continue to evolve and be ahead of the curve and kind of make sure retail investors are protected at a pan-India scale. And so thank you for having me today. Appreciate your time.